Have you prepared the final computation of income yet? If not, then keep watching this video because the season of income tax return filing is on. Schema is released and Form 1616 is received. So, what are you waiting for? As a simple employee with having salary income and some other income, don't spend so much time and money to file ITR through a return preparer. Hello everyone, I'm Saloni from Webtel. In this video, I will be sharing an important understanding of ITR-01. What kind of information and fields are available in ITR-01 and how we can file ITR by using an easy step in Webtel. So stay tuned, and before starting this video, I request you to subscribe to our YouTube channel Webtel Electrosoft to get regular compliance updates. Let's start with the basic detail available in ITR-01. For this, I am taking you to my screen.
So, as you can see on the screen, our today's topic is ITR-01 for the assessment year 2023 and 24. And in this topic, we are going to cover the points related to the applicability of ITR-01, source of income, and the sections under which an ITR can be filed. So, let's begin. Firstly, we need to understand about the applicability of an ITR-01. Basically, ITR-01 is applicable only for the individuals, and if you are a resident, then only an ITR-01 can be filed. Not ordinary resident will not be able to file the ITR-01. And if the person is having income up to rupees 50 lakh, then only ITR-01 will be applicable. And in case if the income exceeds 50 lakh, then ITR-2 will be applicable. And if we talk about the source of income, then the source of income under ITR-01 will be covered like salary, one house property, other source income like interest, dividend, etc. And if the income is up to rupees 5,000 of the agriculture income. Then comes ITR-01 is not applicable in few cases. If you were the director in any company, or if you have invested in any unlisted equity shares of a company. Then, if your TDS has been deducted under section 194N. Here we need to understand about the section 194N. If a sum or aggregate of the sum withdrawn in cash by a person in a particular financial year exceeds rupees 20 lakh, if no ITR has been filed for all the 3 previous assessment years, or 1 crore if the ITRs have been filed for all or any one of 3 previous assessment years, then you will not be able to file the ITR-01. Then comes income tax is deferred on ESOPs. Here we need to understand what is a ESOP. Basically, ESOP means Employee Stock Option Plan. An ESOP grants company stock to employees, often based on the duration of their employment. ESOPs are taxed on the amount which is calculated as a differential amount between the exercise price and the market price on the date of such exercise of ESOPs. Such difference is treated as perks in the hands of the employees and taxed under the head salary. Moving further on ITR-01, Part A. Basically, Part A contains general information related to the personal information of an individual or an assessee. Most of the important information is validated from the different database available on the government portal like Aadhaar number, PAN number, SIN number in case of ITR 6, or you can say in case of a company. Then moving ahead for our next point, which is related to the filing sections of an ITR. Basically, if you are going to file your return on or before the due date, then you need to file the return under section 139(1). And CBDT has also made certain changes in ITR-01 form with regard to disclosure under section 139(1), which is filed voluntarily by persons having annual taxable income of less than rupees 2.5 lakh. These individuals will not be required to intimate in their ITR forms even if their fixed deposit exceeds rupees 1 crore. Then comes the section 139 subsection 4, which is related to the belated return. If you are going to file the return after the due date, then your return will be treated as a belated return. Then comes the section 139.5. If you are going to file a revised return, then you need to file your return as per the section 139.5. Then comes the section 1192B. After the condonation of the delay. Condonation of delay in the filing of return of income is a special dispensation provided by the Income Tax Department to the taxpayers who have failed to file their income returns within the prescribed date. It allows taxpayers to file their return without fearing any late fee. Then few sections are there if you have received any notice under different sections. So first section is 139.9, which is related to a defective return. The IT department will send you a defective notice under section 139.9 of the Income Tax Act on your registered email ID, and the same can be viewed by logging on the e-filing portal. Then comes your section 142.1, more clarification or for further details of your return. Income Tax Act 1961 empowers income tax authorities to issue a notice for more clarification or for further details about where a return has been filed, or if the return has not been filed, then to furnish the required information in a prescribed manner. Then comes the section 148, which is related to disagree with the taxpayer's assessment. A notice will be issued by the income tax officer to reassess the taxpayer's income tax return if they disagree with the taxpayer's assessment and believe that some income has not been properly assessed. Then comes the section 153C of the Income Tax Act 1961, which has been introduced in our current budget for the assessment year 2023 and 24. This section is related to assessment of the income of a person other than the person in whose case search has been initiated. This section is basically related to where a search is conducted on a person and undisclosed assets, documents indicating undisclosed incomes are found as belonging to or pertaining to other person other than the search person. Then in that case proceedings under section 153C would be undertaken against the other person. Then discontinued in ITR-01. Income under the 7th proviso to section 139.1 but otherwise not required to furnish a return of income. This point has been discontinued. If you have deposited an amount or aggregate of amount exceeding rupees 1 crore in one or more current accounts, then you don't need to disclose in your ITR-1. Then comes new scheme versus old scheme. Person is liable to claim whether they want to opt for the old regime or whether they want to opt for the new regime under section 115 BAC. Most of the allowances like HRA, LTA and other allowances are taxable in the new regime. And after the due date of the filing of your ITR, new regime cannot be opted by the taxpayer. Then comes the source of income. First one is salary income. If a person is having the income from salary, and the salary will be including the points like salary, perks, profit in lieu of salary, income from retirement benefits accounts maintained in another country, whether or not notified under section 89A. And if we talk about the salary, salary includes all the taxable salary, taxable allowances, taxable retirement benefits, etc. Amount in the column of perks is considered only taxable perks after the exemptions are available. And if an employer received an amount on behalf of salary In case of termination or case specific, then you need to fill the amount in the profit in lieu of salary. Then comes your retirement benefits. A specific account, or you can say a specified account, maintained in a notified country for the retirement benefits. The income from such an account is not taxable on an accrual basis, but it is taxed by such country at the time of redemption or withdrawal. Notified countries are covered like United Kingdom, US, and Canada. And we will be covering all the detailed explanation of income from retirement benefit accounts and relief under section 89A in our upcoming video. Now moving ahead to our next source of income, which is income from house property. So if you are having one house property income, then you can show in ITR-01. And as per the Income Tax Act, 3 type of properties has been defined. First one is self-occupied, then comes let out, and then your deemed let out. If we talk about the self-occupied property, then this column is mostly used to take benefit of interest on home loan. And in case of let out, you need to enter the gross rent received, receivable or lettable value during the year. And in the case of deemed let out, the basic difference between a deemed let out property and a let out property is that in a let out property, the income from rent or consideration received is assessed while tax filing, while any vacant property is treated as deemed let out property in the case of an individual who owns multiple properties. Then if you have paid any taxes to the local authorities like municipal taxes, property taxes, etc., and interest payable on borrowed capital. In this column, we will cover the interest on the home loan. However, the principal amount will be claimed as a deduction under 80C. Then comes your arrears or unrealized rent received during the year less 30%. The arrears of the rent refers to the unrealized rent received by the owner that was not charged to income tax in the previous years. For example, imagine Mr. X defaults on 5-month rent of a property he has been staying on since past 11 months. This amount due for 5 months will be referred to as an unrealized rent under the income from house property. Then comes set off or carry forward of loss from house property. If we talk about the self-occupied property, then if you are going to opt for the old regime, then up to 2 lakh can be set off and balance cannot be carried forward in case of an ITR-01. If you want to set off or carry forward the loss of house property, then you need to fill the ITR-02. And in case if you are going to opt for the new regime, then you will not be able to set off or carry forward your losses. Then if your criteria is let out or deemed to be let out, then actual loss can be set off and balance can also be carried forward. But in case of new tax regime, you will not be able to set off the loss and you will not be able to carry forward the losses. Then comes income from other sources. If we talk about the income from other sources, then any income including interest income, dividend income, family pension, winning and lotteries, etc. You need to show the details under the income from other sources here. And quarterly breakup of dividend income is also required. If you want to claim any deductions under section 57(2)(a), it is not allowed under new tax regime. It is only allowed under the old tax regime. And here only family pension is allowed up to 1/3 or 15,000 of your income. Whichever is less will be considered as a deduction under section 57(2)(a). Income claimed for relief from taxation under 89A can be claimed as a deduction under income from other sources. Then comes your deductions under the chapter 6A. So if a person is going to opt for the old regime, then they can claim the deductions of all the sections available under chapter 6A. But if a person is going to opt for the new tax regime, then only employer contribution towards NPS under section 80 CCD2 is allowed. No other deductions are allowed as per the new regime. And if the deductions under 80G claim, details need to be provided under schedule 80G. And cash donation is only allowed up to rupees 2000. Then comes the computation of your income. So if we talk about the computation of your tax payable, then at point number D1, tax payable on your total income will be calculated as per the slab rate. And if you are eligible to claim any rebate under section 87A will be calculated. Then if you are eligible to claim the deduction, or if you are eligible to claim any rebate under section 87A, then at point number D3 your tax will be calculated. And on your tax value 4% education and health education cess will be calculated. Then you need to calculate the total tax including your education cess amount. And if you have claimed any relief under section 89 in the form E, you need to show the amount. And if any interest is calculated under section 234A, B or C, you need to total include the amount in your total tax. And at point number D11 your total tax will be calculated including all your late fee and interest amount. And at point number D12 your total tax paid will be calculated. So you need to pay the total tax which has been calculated at point number D12. Then in case of arrears of your salary, then you need to fill up a form to claim the relief under section 89. You need to fill a form 10E to claim the rebate under section 89. Then comes the computation of your income, which is part E. In the part E, you need to show the bank account details, like you need to enter the IFSC code, name of your bank account number, and you also need to select the bank as a refund bank. Then comes the IT schedule. In the IT schedule, IT details of your advance tax and self-assessment tax will be calculated. Then comes your schedule TDS. In the schedule TDS, all the details related to your TDS, TCS will be calculated. So this is all about the basic of your ITR-01. And for the filing of ITR, we need to show how we can file the ITR-01 through our WebTax. So this is our WebTax software through which you will be able to file the ITR in just 3 steps. For the creation of the assessee master, you need to go to the create assessee, and after clicking on create assessee, you will be able to see a message like this. And if you want to import the data from the government portal, then you can click on yes. And after clicking on yes, here you need to enter the user ID of your government portal. Then you need to enter the password over here. And after entering your password, click on submit button. And after clicking on submit, the detail of the assessee will be reflecting automatically from the government portal like this. So you don't need to enter the details manually. You can import the data from the government portal as well. So in the main screen of the assessee master, or in the first page of your assessee master, basic details of your assessee will be reflecting. Then you need to select the source of income. And as per the selection of your source of income, the form number will be reflecting over here. Then you need to go to the page number 2, and at the page number 2, your bank account detail will be reflecting. You need to select the type of your account, whether your account is a saving account or a current account. Then you need to select one bank as a refund bank. And on the page number 3, acknowledgement detail of the assessee will be reflecting automatically. And after providing all the details, you need to click on save button and your data will be saved like this. And after the creation, you need to select the details of the assessee by clicking on select company or assessee, or you can use the shortcut key as a F3. Here the list of all the created assessee will be reflecting. So you need to select the name of the assessee by double click, and then the name of the assessee and the assessment tier will be reflecting on the top of your software. Then you need to go to the computation, and after clicking on computation you will be able to see a screen like this. Here you need to select whether the individual was at any time during the financial year was the director in any company, or he was having any unlisted company equity shares. In case if you are going to select this option as a yes, then your form will be converted into ITR-2. And in case if you want to file the ITR-1, then you can click on save button. And after clicking on save, the computation page of your employee or your assessee will be reflecting like this. Here you need to enter all the details. Like here we need to enter the income details related to the salary. To enter the details in the salary, go to the salary head, and here you need to enter the details of your employer. You need to select the category of your employer from the given categories, and then you need to enter the details by clicking on click here to fill the data option. Here you can enter the basic salary, bonus, house rent allowance, and any other allowances if you have received from your employer. You can enter the details like this in the salary breakup. And in case if you are not able to see any head, then you can select the head from the drop down list. And then you need to select the type of your salary head. Like if you are going to add the head of the salary as allowance, perquisites, or profit in lieu of salary, so you need to select the salary type from the drop down list. And then you can click on save button, and then your data will be saved. And after that your data will be saved like this, and your deduction as per the section 16 will be calculated automatically. Then you need to click on save button, and then like this your data will be saved in the salary schedule. Similarly, you need to enter the income from house property. If you are having the income from house property, then you need to enter the property details over here. You need to enter the property address, you need to enter the city, state you need to select from the drop down. Then you need to select the owner of the property. In case of ITR-1, you can select the property owner as a self. Then you need to enter the tenant details in these columns, and then you need to enter the annual lettable value. Here also you need to select the property type as a let out property. Then you need to enter the tenant details, and then you need to enter the annual lettable value of your property. And after entering your annual lettable value, standard deduction as per the section 24A will be calculated automatically. And at the end, income from house property amount will be calculated automatically. And after entering all the details, you need to click on save button, and then your data income from house property will be saved like this. Then in case if you are having any other source of income, then you need to click on income from other sources head, and then you can enter the details like saving bank interest income. And if you are receiving any saving bank interest, then you can import the bank details from your master data as well. By clicking on import bank details from the master, you need to click on yes, and then you need to enter the amount over here. And after entering the amount from saving bank interest, you need to click on save button. And after saving the detail in the saving bank interest column, the 10,000 amount will be calculated automatically as a deduction under section 80 TTA. And in case if you are having any other kind of deductions in the chapter 6a, you can show all the details under different sections. And then you can click on save button, and after clicking on save, your tax amount will be calculated as per the slab rate. In case if you have paid any self assessment tax, or if you have paid any advance tax, or if any TDS has been deducted, so you can import the data from 26AS as well. For importing the data, you need to click on import 26AS, and after that you need to go to import data from 26AS, and like this your data will be imported from the government portal related to your salary, related to your other than salary details. So this is the process to enter the details in the computation. And after entering all the details, you just need to go to generate JSN, and after clicking on generate JSN, the summary of your income details will be reflecting over here. Then you need to click on proceed, and after clicking on proceed, you need to click on get form number 1 JSN, and then you need to select the 139(1)(7) proviso criteria. If you have deposited 1 crore in one or more account, then you need to select this option as a yes. But this option has been discontinued for the current assessment year, which is assessment year 2023 and 24. Then you need to click on save button, and like this your data will be saved. And in case if you want to update the data from the government portal, then you can click on yes, otherwise you can click on no. You need to select the location on which you want to save your JSN file. Select the location and then click on save button. So like this your JSN file will be generated. So this is the process to generate a TDS. This is the process to generate an ITR-01 through our Webby tax software. And in case if you want to generate and upload the return, then you can use this option as well, generate and upload on the income tax portal. So this is all about the filing of ITR-01 through Webby tax.
I hope you have understood that the details in ITR-01. ITR-01 is the simplest return available on the income tax portal, and loads of fields are autofilled with the relevant information available. Take your Form 16, get the information from AIS and upload the return before the due date. Share this video with all your known person who is earning income related to ITR-01.